Hi, hello, and welcome. This is Ben Astra from Matrix Global FX. I hope you guys had an enjoyable session last day, and there were a lot of things going up in the market. Yesterday, we had inflation data came from the New Zealand shows some kind of stickiness. Of course, the Kiwi popped up from 0.5864 to 0.5915 levels. So I didn't take this trade because I wasn't expected a lot of things going up in the market. I was just looking at the UK CPI, and I just shorted the pound dollar, but I stopped out because of the fact that UK CPI inflation data in the UK has been a little bit higher, especially the headline, and a lot of things. The dollar pound dollar rose up from 1.24 to 1.2475 levels. For day traders, they couldn't able to uh, hang on their positions for long period of time. So because we are trading with a leverage, at least I trade with one is to 100. Some trade with 1 is to 50. In India, we traded with 1 is to 30. So for day traders, it has been a very nightmare situation. They have just got to take a trade with quick hitting targets, and having an ample risk management in place. So this is what Robert Petrucci sir always say in the angry meta traders articles that we share every day. So guys, from USD JPY, I didn't talk about USD JPY for the last couple of weeks, but I just wanted to mention that this is not a big deal compared to what we had experienced in the 2022. Yes, of course, the levels are very high when comparing to 2022. But what the BOJ officials or other central banks could have analyzed is this: at least the Fed will cut one rate. At least the Fed will cut rates one time, I'm sorry, by this year. Maybe every Federal Reserve officials are saying about this. Yeah. Inflation has been moving up in the US, and US economy is in very growth motive. What is tricky right now is that if US data is coming very positive in the next couple of weeks, or if we can expect some kind of higher growth, higher retail sales, higher industrial production, higher manufacturing PMI like that, or higher PPI, we can expect some kind of pressure on other currencies, and maybe Bank of Japan may intervene in the market. It is a possibility. So because it is a 34-year level that we are seeing in the USD JPY, another Asian currencies are also having a lot of pressure because of Chinese factor. Because China, yesterday we said that Chinese are having a slower demand in their own economy, and they are also witnessing some kind of external pressure, demand pressure with their other economies. So we can see that Malaysian ringgit also depreciated close to the Asian financial crisis level because of the fact that China is one of the biggest trading partner. Yeah, they don't have many export sectors like. Yes, maybe that these external factors are the basic common thing that why currencies are depreciating. Of course, the US rates are one factor, but the demand factor, it is also the main reason, because when deficits are moving up, the currencies will depreciate. Trade deficits, especially Malaysia having a very slower export growth in the last 1 year. Which we will see in the weekend video. And yes guys, this is my understanding of what's going up in the US, and of course intervention is possible in the USD JPY. Maybe the BOJ officials and other central banks were thinking is out of our capability, and I expect a lot of stealth intervention from these central banks. For euro dollar, every ECB members were saying that they are looking for cut by June, and Maybe it would be feasible that ECB cut rates other than but better than other central banks like BOE or RBN is it or and RBA, Reserve Bank of Australia. Today we have the Australian employment data which showed labor market is very loose, and this has caused some kind of you know moves in the Australian dollar, but we cannot expect a big move. Yeah. So yes, guys, this is my inputs today, and we will coming up with a lot of insights tomorrow. Until then, I'm signing up. Bye.